Gold bulls need to thank ECB President Mario Draghi and a break of dollar-yen technical support for the rally last night that reached a high of 1423.9. The ECB President stated that further monetary easing isn't at the forefront of policymakers' minds, and this lifted the euro and caused broad-scale selling of the dollar. Technical dollar-yen support at 98.85 gave way to the dollar bears, and this helped strong downward momentum and consequentially helped gold move higher back above the 1400 mark. Be aware that this dollar decline may just be a correction, considering that the Fed is still intent on tapering stimulus at some point, and on the contrary, Japan is in the beginning phases of an aggressive monetary stimulus program. So the dollar yen could quite quickly recover the losses that it's been getting recently. So bear that in mind. That could hold gold back from making its long overdue technical correction. Technically it does look like we're ready to make a sustained correction, but fundamentally it might hold it back. Let's just take a look at the charts right now. Just having a look at the 1 hour chart, we can see that there's a potential double top here. We have a neckline here about 1411 shown by the green line. If price moves down below this green line at 1411, it is a short-term shorting opportunity. Use a Fibonacci grid to assess where price might find some support. It might find some support around 61.8% retracement level, which is around 1406. So that's a feasible target level. It's very short term, this is. Looking at it longer term, it's good to take a look at the weekly chart, which is giving some indicators. I use the momentum indicator, which is one of the few leading indicators, and price often follows the patterns of a momentum indicator. So here I'm just drawing a bearish trend line on the momentum indicator itself, and as you can see, price is it's not price, it's the momentum indicators almost intersecting with its own bearish trend line. If we see a break here, that will indicate that this downward momentum, the long-term downward momentum of gold, is losing steam and a probable correction is on the cards. If we do see a break here, long-term position traders could open up a long, and a feasible target level would be 1486, which would complete a double bottom on this weekly chart. It's more visible actually on the daily chart, but 1486, 1487, 88 are feasible target levels. This play here would definitely be for longer term position traders, maybe with larger trading accounts, because no doubt before price, if price does, if the momentum indicator does break its own bearish trend line, and we see price approaching this target level, along the way there will be many fluctuations. So it's probably more suitable for position traders rather than intraday shorter term traders. So bear that in mind. And tonight we have the US non-farms. That will be at 8:30. So please reduce any exposure around that number. That will cause a lot of volatility. Thank you very much for listening to me, and I'll speak to you again same time on Monday.